Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through our live mortgage rates, and then we're going to do a deep dive into portfolio loans or blanket loans. So, give us just a minute here to go live on all the different platforms. Appreciate everybody tuning in nice and early. I see some comments already coming in there. Go ahead and drop a comment there as you tune in. All right. Appreciate that. Good morning, everyone there in the chat. All right. So it looks like we're live on all the different platforms. We'll go ahead and get started. What we'll do is we'll take the chat off the screen for now, but keep dropping comments there in the chat. Drop any questions you have in the chat as well. We'll go ahead and get into it here. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our live mortgage rates and then do a deep dive into a different topic. Now, today's loan topic is going to be blanket loans, aka portfolio loans. So Jose will take us into a deep dive of that shortly. But before we do that, we'll pull up the rates and see what they're looking like today. So Nick, if you're ready, let's go ahead and pull up the live rates.
All right. So before I share my screen here, let's go over our little speech. What we're going to look at is the rates for today. It is May 14th, just after 11 a.m. here. So all of our standard programs are live. We'll show a general scenario so we can compare across the programs. We'll set up a 500,000 loan amount. 500,000 purchase price, 400,000 loan amount. That's 80% loan to value, 20% down payment. We'll set all the demos here to a 760 estimated credit score and a 40% debt to income ratio. And when we move on to our DSCR, we will use a 1.5 value, which I will explain in a minute. So with those basic settings, we will compare the APR across the program. If you'd like a full itemized loan estimate that breaks down all the fees that go into the APR, please get with our team members. We have over 300 loan officers that can help you out. Let me share my screen. All right. So these are our rates for today. Again, this is a standard scenario. So we're going to start on the top left here and compare across the programs. So typically the first option we look at for most customers for a primary home is going to be our standard 30-year fixed conventional primary option. Today that comes in as low as a 6.624 rate. APR comes in at 6.966, about the same as it was yesterday, which is good in some ways, right? We love to see no change, and it's definitely down from where it was before. Now, if our customer doesn't qualify for conventional, typically the next option we want to present is an FHA option. Today that comes in at 5.875 rate and an APR of 6.841. So the FHA does require upfront and yearly mortgage insurance, but it does allow more leniency on credit issues and credit events, as well as a higher debt to income ratio. So if our customers don't qualify for conventional, typically they can sometimes qualify for FHA, where they may not qualify here. So the APR is what you want to compare. If a customer qualifies for both, definitely maybe check out both. FHA might be a touch cheaper, but our customers that need it, definitely a good option. And now we move into our specialty option. So VA is only for our eligible active service members and veterans. If you are eligible, you have that certificate of eligibility. These programs are amazing. 30-year fixed VA coming in at 6% today. Final APR 6.312. So notice it's much lower than conventional and FHA. So definitely choose that if you are eligible. And scroll down a little bit here and we'll pull up our first, we'll pull up the last agency government example here for USDA, only for properties that are in USDA eligible areas. So if you are, this is a good option to consider. USDA comes in at 5.875 and the final APR 6.641 when you include all of the costs and fees. So typically, if a customer is looking for a USDA area, they're going to compare it to conventional or FHA. Notice that USDA is always a touch cheaper. So if you do qualify for one of those areas, definitely look at these programs. And now we'll move on to our non-QM options, where we have over 5,000 alternatives beyond the 4 standard that you see here. So typically, if our customer doesn't qualify for any standard programs, we'll want to go with an alternative doc program. This non-QM alt doc for primary typically is a bank statement or similar option. We also have 1099, P&L, asset-related programs, all kinds of options. but this lowest rate option, most likely a bank statement, the most common, 7.125 rate, final APR 7.447. And we usually compare that to conventional. So if we look at conventional compared to here, we're within a half a point. So our customers that need to use those alternative docs, no problem. It's very comparable, about a half a point more expensive to use those alternative docs. And our first investment option here. So non-QM alt doc for investment. Again, probably a bank statement option. We also have 1099, P&L, asset related, all kinds of options here in the non-QM. But the cheapest one today for an investment property comes in at 7.5 rate, final APR 7.860. So we're going to compare that APR across our other investment options. So first up for agency government, there is no government option, so just the agency. No FHA, VA, or USDA for investments. We'll stick with our conventional option here. So conventional investment option comes in at 7.375 today, final APR 7.74. So that's a little bit lower than it was yesterday. They were about the same as alt doc, but notice they're very comparable here between conventional option for investments and non-QM options. However, definitely recommend all of our investors out there check out our DSCR options, our favorite options here. So our first DSCR example, using no personal income or employment, just the estimated rental income from the property to determine the DSCR value. If the estimated rents can cover the expenses, aka the property cash flows, that's a ratio of 1 or higher. I did use a 1.5 for all these demos so we can see all the programs. So this first option is the DSCR with a 3-year prepayment penalty, which is standard. That comes in at 7.25 rate today, final APR at 7.573. Notice it's cheaper than conventional. Definitely very attractive for our investors. And if we move on to our 5-year prepay option, not all programs allow it, but those that do definitely improve the rate a little bit. Rates as low as 6.875, final APR 7.214, which really blows conventional out of the water if our investors are able to add that 5-year prepayment feature. And scroll down here, we'll see our last DSCR option with no prepayment. So some investors don't want to have a prepayment penalty, no problem. It's just a little more expensive. Rates for that option come in at 7.75. Final APR 8.115. Notice that's a little more expensive than conventional, so definitely recommend our investors add a prepayment penalty to improve the rate here. And our final 2 examples are our second mortgage options. These are not HELOCs, not adjustable. These are fixed rate second mortgages, definitely a new product that's out there. These are non-QM as well, so these can use bank statements, alt docs, etc. First option up here, 30-year fixed second mortgage for a primary home. So our primary occupant can get cash out without touching their first mortgage, and it doesn't have to be adjustable. So the rates are lower here, 8.625 rate, final APR 9.059. And for our investors that, again, don't want to touch that first mortgage, maybe they have a low rate, but still want to get cash out without a HELOC, these options are much more attractive for rates. 30-year fixed second mortgage for investors, 9.875 rate, final APR 10.185. So great options here, and we have thousands of more. These are just the most common. So let me switch my screen, and we'll get into one of those other options that we unfortunately don't get to quote always in the live demo, which is our blanket or portfolio loan. So there's no quick button and quick scenario for these specialty loan types. These are going to be loans for investors that own multiple properties and want to put multiple properties, multiple folios under one loan. So Jose, let's explain a little bit more about the setup here, and then let's check out the rates that we have.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. First, I guess let's establish the name. Commonly referred to as a portfolio loan, but technically it is a blanket loan. Now, the reason it's been referred to as a portfolio loan because investors use them to get a loan on their portfolio of properties. But it's a blanket loan because a blanket loan is one loan that encumbers multiple individually folioed properties, right? So what we're talking about here is individual properties, not units within one structure, right? So you're not going to use this to finance a 5-unit multifamily building, but you are going to use this to finance 5 individual properties. It could be condos, could be 1 unit properties, 2 unit, 3 units, 4 unit properties. But the key is that they all have individual folio numbers. They're all individual properties. That's the key takeaway here. Now, let's also talk a little bit about some of the, I guess, conceptions. I'm not going to call them necessarily misconceptions out there on the benefits of a blanket loan. But sometimes some borrowers will think that the reason to get the blanket loan, the main reason is because they're going to save money on the transaction expenses. Not necessarily the case. You may save a little bit in some cases, but what's going to happen is that there could be additional review fees, right? They may charge an additional closing fee on the lender side, depending how many properties you have, 1 to 5, 6 to 10, 11 to 15, so forth and so on, right? They're going to charge a different review fee, closing fee, whatever you want to call it, because there's additional properties to review, additional title work to review. You're still going to need title work on all the individual properties. It's just going to be under one loan, right? You're going to have also appraisals for each individual property, right? So you are going to have a lot of the transactional expenses. Loan origination, loan discount is still based on the loan amount, the overall loan amount. So there's no real savings there. But let me now tell you where the real power of the blanket loan lies is going to be in your ability to finance lower value properties, or also for some investors that, let's say, for example, the investor may be tapped out on the number of properties he can get under a certain property type, right? Maybe they've maxed out their conventional investment properties, they're at 10. Maybe they've maxed out the limit with a particular investor that we can use for the number of properties that any individual borrower can have financed by one conduit. You know, it's like 5 million, 3 million, depending on the conduit. But the portfolio loan or blanket loan allows us then to issue that one loan to cover, let's say, 3, 4, 5, 10 properties under one loan, to be able to work around those restrictions. And also, most importantly, the blanket loan will usually let you finance lower valued properties, right? I mean, we have options on the blanket loans that'll go as low as allocating $50,000 in loan per property, meaning you could get to 75% of that in that option, which would be roughly $67,000, $68,000 value property. So just imagine you can get 10 properties of 70,000 and put them under a blanket loan, where normally you wouldn't even be able to get one unless you were using a hard money lender that's going to lend you $50,000 or $40,000 on one property for 1, 2, or 3 years max. So that's really the power of the blanket loan, is getting those lower valued properties, putting them into a portfolio, and then down the road, as is usually the case, you're going to refinance out of the portfolio loans when your properties get more value, to cash them out and keep going buying more properties. But the idea is you can't cash them out down the road if you weren't able to close on them in the first place. So we do have options for down to 50,000, and then we have the option that I'm going to share today, which is our best priced option for a blanket loan that allows you to go up to 80% loan to value on the blanket loan. The lower value property blanket loan option, besides having a little bit higher rate, only goes up to 75%. So I'm going to show you the best case scenario here for your borrowers with decent credit and needing the maximum leverage on the portfolio. This is the one for you. So let me go ahead and share my options with you today for our blanket loan purchases and refinances. Now, this first option here is with a 3-year prepayment penalty with a DSCR of at least 1.0. And this prepayment is a declining prepayment, which is 3% first year, 2% second year, 1% third year. So in this case, I mean, there are a multitude of options. I'm just giving you the rate with 1.0 in loan discount buy down fee. So in this case, that rate is an amazing 8.198%, right? For a $500,000 purchase, $400,000 loan, blanket loan with a 3-year prepay. Now, with a 5-year declining prepay, you'll note that the rate does drop a bit. We were at 8.198, so the rate drops 0.1% for the extra 2 years in declining prepay. So now we have 8.098, 1 point loan discount for a $400,000 blanket loan. And now we have a 5-year hard prepay. Each of these options does give you a betterment in the rate. The hard prepay means that the prepayment penalty is fixed at 5% for all 5 years instead of the declining 5, 4, 3, 2, 1. This one is 5, 5, 5, 5, 5. But you do see again a betterment in the rate. The rate is now 7.923 with 1 point loan discount. And now let me give you some cash out options, refi cash outs. This is 75% max LTV on these. And again, we start with our 3-year declining prepay option. Now, when we go to the cash out and we go to the 3-year declining, there is a little bit of an extra add-on to the cost, right? So it's 1.5 points in loan discount to get the rate of 8.157. So if you do go to the 5-year, even if it's a declining, that extra add-on fee is eliminated. And on top of that, we get a rate of 8.223. So 8.223 at a cost of 1 point with a 5-year declining. And then in our last example here, we have the 5-year hard, again, 75% LTV, 8.048%. These are amazing options. All of these are DSCR options, by the way, debt service coverage ratio. Never need any personal income nor job verification from the investors. And again, great options for your lower valued properties or simply the investor that doesn't want to be bothered with 10 individual mortgage statements, wants to just make one payment once a month, simplify their accounting. The blanket loan is the solution. So looking forward to helping you all structure your blanket loans at the Mortgage Calculator.
Okay. I don't see any questions here. Oh, hold on. We do have a question coming in here. And the question is, can you get renovation money for these properties that you're putting in the portfolio?
A portfolio loan is not a renovation loan, unfortunately. The renovation loans, which are the fix flip loans, right? So for this particular option that we're showing, these properties would not be able to have any condition-related items that wouldn't allow them to close. And yeah, this is not a renovation loan that we're talking about here. Keep in mind, renovation loans are all of the kind we're talking about in non-QM is a short-term bridge loan, never going to be a long-term loan.
All right. I don't see any other questions, so I think we can go ahead and wrap it up. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into different loan topics. So we'll have a new topic for you tomorrow. Appreciate everybody tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Take care, everyone.
Thanks, everybody.